All right, let's talk Nordson. The company just put their third quarter numbers on the board, and the initial market reaction was, well, a pretty big pop. But as the day went on, a lot of that early steam fizzled out. So what's the real story here? Is this industrial powerhouse firing on all cylinders, or are there a few things rattling under the hood? You know what? Let's just dive in and break it all down.
So, right off the bat, the headline numbers look great. I mean, this was a clean beat and raise situation. Adjusted earnings per share came in at $2.73. That's a solid 10 cents better than what Wall Street was looking for. And on the revenue side, they pulled in $742 million, smashing the $717 million consensus. You really can't argue with that. It's a strong print, plain and simple.
And you can see the market absolutely loved it at first. In the pre-market, the stock just took off, jumping almost 6%. It was a really decisive, positive reaction. Investors saw that top and bottom line beat, and, they hit the buy button. But this is where the plot thickens. Look at this. That nearly 6% pop got chopped almost in half by the time the closing bell rang. Now, a 3% gain is nothing to sneeze out for sure, but that fade, that tells you that once the big investors and analysts dug into the full report, they found a much more complicated picture than just those great headline numbers. So let's do exactly that. Let's figure out why. Okay, so to really understand what's happening with Nordson, you have to look at their three main business segments. This is where you see it's not one single story, but really a tale of three very different businesses right now. So here's the breakdown. You've got Industrial Precision Solutions, or IPS. That's the biggest piece of the pie, almost half the company. Then there's Medical and Fluid, or MFS, at 30%. And finally, the really exciting part, the Advanced Technology segment, ATS, making up the rest. And trust me, each of these had a wildly different quarter.
Let's start with the big one, IPS. And honestly, it was a mixed bag. Organic sales were actually down 2%. They saw some good things happening in areas like precision agriculture, but that was totally canceled out by ongoing weakness in polymer processing and automotive. But here's the most important takeaway. Management came out and said they think polymer processing has finally hit bottom. That's a huge tell.
Now, moving over to Medical and Fluid Solutions, this was a completely different story. Revenue exploded, up 32% year over year. But, and this is a big but, the engine behind that was the massive $52 million contribution from their recent Atrion acquisition. Still, the core business itself grew a healthy 4% organically, and management said that the whole customer destocking issue, where customers had too much inventory, that's finally getting back to normal.
Okay, but the absolute undisputed star of the show this quarter, that was the Advanced Technology Solutions segment. I mean, look at that number. ATS put up a monster 15% in organic growth. This isn't a one-time thing either. It's the second quarter in a row of double-digit organic growth. That's some serious momentum.
So what's fueling this rocket ship? It's pretty simple, really. It all comes down to one thing: AI. The crazy demand for advanced semiconductor packaging, which you need for all things AI and cloud computing, is this massive wave that Nordson is riding perfectly. Their ATS segment is smack in the middle of maybe the biggest tech trend on the planet right now.
Having a hot segment is great, but what really matters is what management does with it. How do they turn that into actual value for shareholders? So let's take a look at their playbook, how they're executing, and where they're putting their money.
Nothing says good execution better than this quote right here from the CEO. The Atrion deal isn't just working out, it's blowing past expectations, and it's already adding to the bottom line a full year earlier than they planned. I mean, that's just a home run on M&A strategy and proof they know how to integrate a new business.
And it's not just about smart deals. Management is being super disciplined everywhere else. They're paying down debt, getting their leverage to a really healthy level. They're buying back their own stock. And of course, they keep paying out that dividend. This is just classic textbook financial management from a really well-run company. And they're not taking their foot off the gas. The board just gave them the green light for a brand new $500 million share buyback program. When you add that to what they already had, we're talking about roughly $800 million in buyback firepower. That is a massive vote of confidence from the people who know the company best.
Okay, so what does this all mean for the rest of the year? Well, management didn't change their official guidance ranges, but there's a really important little clue in how they phrased it. They're now saying sales will probably end up a little below the midpoint of their range, but earnings per share will be a little above it. What does that tell you? It's a story about profitability. They're squeezing more profit out of every sale, even if the overall sales environment is a little sluggish.
All right, we've looked at the numbers, we've broken down the segments. We've seen management's game plan, so it's time to put it all together. It's time for the next call.
This really is the million-dollar question for anyone looking at this stock, right? On one hand, you've got that headline beat and the absolute rock-star performance from the AI-driven ATS segment. But on the other hand, you have weakness in their biggest business and a pretty cloudy outlook for the broader economy. So which one wins out?
Let's just lay it all out. The bull case is pretty clear. You're hitched to the AI megatrend. With ATS, that Atrion deal is a huge win, they're printing record amounts of free cash, and they're buying back stock like crazy. The bear case? It's all about that sluggishness in their industrial markets, the general economic uncertainty, and frankly, the fact that it's going to get a lot harder for ATS to keep posting such huge growth numbers when they have to compare against these amazing quarters.
So after weighing everything, we think the positives win out here. That powerful long-term growth from the AI trend, combined with just rock-solid execution and capital returns from management, that's a compelling combo. We think the stock is set to do better than the overall market. Our rating is outperform.
So, with that outperform rating in mind, let's just game out one potential idea for more advanced investors. And I have to say this loud and clear up front, this is just an idea for discussion, nothing more. You could look at something we're calling the dividend fortress play. The basic idea is you buy the stock, but then you create a collar around it. So first, you sell a call option above the current price. That brings in some cash, but it also caps your potential gains. Then, you take that cash and use it to buy a put option below the current price, which protects you from a big drop.
And the whole idea behind this trade is simple. You aren't betting on a massive roaring comeback in the economy. Instead, you're betting on management's smart financial moves. That incredible cash flow, the dividend, and that huge buyback plan should create a really strong floor under the stock price. It protects your downside, while you just wait for the rest of the business to catch up to the AI story.
At the end of the day, Nordson's quarter was a masterclass in execution in a really tough environment. It really shows how having a diverse business and a smart capital plan can make all the difference. As always, please be sure to do your own homework. This is not financial advice.